All right. It's October, and we have another market update for you for Austin real estate. I'm David Shapiro, a broker here in town with my colleague Lee Abraham. We're the Shapiro Group. If you're thinking about buying or selling, reach out to us. Info is below. But as usual, we want to just dive right into the stats. So you can always find us back here at Real Estate Video Hub to find our YouTube channel quickly. We've been doing these market updates every month for several years now. So you can always find us here. All right, let's take a look at what we got. The number of active listings coming down for the third month in a row. So it was looking like a heck of a peak there a couple months ago, and it's starting to come down, and the seasonality continues.
Yeah, so the downward trend over the past few months, when we take a current snapshot at the beginning of October, David, there are 3,282 active listings of single-family homes in the city of Austin. When we look at the chart there on the left at the number of sales, the 30-day pending number. So over the past 30 days, 717 pending sales. We divide that into the 3,282 active listings, translates to about a 4.6 month housing inventory. The other metrics, whether it's the closed sales for the past month, actually the lowest number on the chart. There are a couple of interesting statistics that jumped out at me as I was putting the slides together. And this 679 is kind of the first indicator of some of the data we'll be looking at as a relatively low number, even lower than the 12-month average. So if we were basing it on closed sales, be looking more like a 5-month inventory. But for our purposes, we're right at about 4.5-month housing inventory.
And then over time, you can see the trend is similar to what we saw with the active listings, although, wow, stable from last month to this month, both at 4.6. And then the number of sales per month, you can see we're up 17% year over year and down 10% month to month. And this trend continues of just very low number of sales. If you go back and watch our Trends Don't Lie video, which I'd recommend, the easiest stat to look at is the city of Austin. If the trend line had continued, we'd be looking at around 17,000 sales per year, and we're probably going to end this year around 10,000. So it's a huge drop off in the number of transactions that are happening, and everybody's feeling that, when it comes to days on market and the other stats that we'll look at.
And so this number, David, was also not going to say shocking, but interesting, with a significant drop month to month. That's to be expected when you're going from August to September, just over 7%, 7.3. And then year over year also down just under 3%. So we made sort of a bold statement last month about timing the market. Was the market at the bottom? And we agreed that it's a bit more directional than specific, but this stat may be the bottom. We'll see. We'll see what happens as we go forward. In hindsight, is this the bottom? Again, that question lingers now for the second month.
Yeah, anecdotally, just talking with people out in the wild saying like, I feel like I should be buying a house right now. I heard that at a party the other day. Like, it feels like it's the bottom, but I want to rent, but I feel like I should buy. So there's some of that out there. People are getting that sense, and I'll be curious to see if the bottom is this fall. This is it. Days to sell up 6.3% both year over year and month over month. And not that surprising to see it go a little bit up in September. People are getting back to school, and generally things pick up a little bit right in the fall here before the holidays. So we'll see if that picks up a little bit in October.
And the sale price, list price ratio, David. So again, the potential canary in a coal mine at the front end of a trend, it's up month over month. So that's not been the case for a bit now, for a minute, as the kids say. And so that's tickling up. So the average price down, sale price, list price ratio slightly up. Again, a potential indicator of a bottom.
Number of new listings. So not a big change here. Anything to note here, Lee?
It's just interesting that this is the second statistic where the year over the year and month to month are exactly the same numbers.
Yeah.
So, I mean, that's, I hate to, or proud to be a data nerd. And that's just kind of, you got to have fun where you find it.
Yeah. All right. And then our listing inventory barometer. So trying to get you some real-time data. And this is a proprietary piece of data that Lee has put together. And at the bottom here, you'll see the most recent 4 weeks. So we got the weeks date range here, the number of new listings, pending sales, and then the ratio. So Lee, what's to note here?
Well, again, as we are into the new abnormal, we are seeing that this is not the whole story. And so let's go to the next slide, David, and we factor in the expireds and withdrawn continue to be very impactful on our inventory numbers. And so we can look at August to September week there at the beginning of this 4 week span. And there was just a big drop in number of listings based on expires and withdrawn. Must have been 6 months prior. A lot of listings hit the market. Whatever the case is, we've had an actual reduction in the number of active listings, and this is the large reason why. We talked about discretionary sellers, people who can time things a bit if they get their price or not, choose to rent out the home, have some other use for it. So it just continues to be interesting how impactful the expireds and withdrawns are on our supply demand.
And so here you can see is the zero line, right? And so anything below are, let's see, we're losing listings. So we're selling more than are coming on the market. And then here inventory is growing.
Yeah, just another way to look at the data. And this does include the expireds and withdrawns, which are bringing those numbers down, as opposed to the barometer, which is only based on active listings, new listings, and pending sales.
And then another way to visualize it. And so, yeah, these two are coming closer together. Although last month it looks like, well, I guess new listings were up, but also pending sales were up slightly.
Yeah, it's a data dance, and they're moving in step with each other. And that's the sign that we're looking for value stability. And so when we talk, and we've mentioned this many times, about market stability, we're referring to equity and pricing. We understand that the sales volume is weighed down, obviously. So that's not stable, if you will, relative to long-term trends. But as long as these lines are moving generally in the same direction, that's good for values.
Well, this one's, I was interested to see the change here because this is a big talking point over the last month since we did our last video with the Fed cutting for the first time in a year. And would that impact mortgage rates? So do you remember what we were at when we reported last month?
I'd be fibbing if I was to say that I actually remember, but I was probably down a bit from what we were reporting last month.
Yeah, I'll pull it up real quick. But yeah, it was 6.5 when we reported last month. So down a little bit. I've heard anecdotally stories of people refining, and it doesn't seem like it's a big enough move to entice a lot of buyers yet, but I think there's buyers waiting. And if this thing gets under 6, there's a tranche of buyers that'll be enticed, and then when it gets below 5, probably another big tranche of buyers. And then you're really starting to get to the point where, okay, I can get a 4.9 rate. My current rate is 4. It's not as big of a jump to be able to go move and make the move that you've been wanting to make for the last 2 years and you've been putting off. So we'll see what happens there. And hopefully these rates can come down further over the next year. It's good for everybody. And just the what I've been hearing amongst commentators that comment on the economy and the markets is the majority of the US participates in home ownership. It's, in the high 50s or even 60%, which is a little bit different than the stock market, which is maybe in the 40% range. So it does benefit more people for interest rates on mortgages to come down than for the stock market to go up. So there is definitely a broad incentive for this to happen. So I imagine that a lot of people are working towards making this happen over the next year.
All right. Well, thank you for participating in our monthly report. We hope that bringing you the current statistics, the local stats that we do each month are helpful in your real estate journey. So please comment below if you have a question, give us a like, and we will look forward to talking to you next month.